After Bitcoin, Ethereum is frequently referred to as the second most popular cryptocurrency. However, unlike Bitcoin and most other virtual currencies, Ethereum is intended to be much more than a medium of exchange or a store of value. Ethereum, on the other hand, refers to itself as a decentralized computing network based on blockchain technology. Let's take a look at what that means. The Financial and Investment Wisdom channel is all about making better financial decisions. If you're looking for financial literacy, growth investing, trading, or want to improve your finances, this could be a great one for you. What exactly is Ethereum? Ethereum is one of the thousands of cryptocurrencies that have sprung up in recent years. Ethereum, the brainchild of 8 co-founders, made its debut in 2015. The cryptocurrency or platform is known as Ethereum, and the individual unit is known as Ether. Ethereum is managed and tracked by a blockchain, which is a decentralized computer network or distributed ledger. Consider a blockchain to be a running record of every transaction that has ever occurred in cryptocurrency. Computers in the network validate transactions and ensure data integrity. This decentralized network is part of what makes Ethereum and other cryptocurrencies appealing. Users can exchange money without a central intermediary, such as a bank, and the currency is nearly autonomous due to the lack of a central bank. Ethereum also enables users to conduct transactions virtually anonymously, even if the marketing is publicly visible on the blockchain. While the entire field is called currency, it may be more beneficial to consider crypto as a token that can be spent for a specific purpose enabled by the Ethereum platform. The coin, for example, enables functions such as sending money and buying and selling goods. However, Ethereum is capable of much more, and it can also serve as the foundation for smart contracts and other applications. What is the origin of Ether coins? There was approximately 117 million Ether in circulation as of August 2021. Furthermore, while new coins can be mined, the total annual issuance is limited. This is in stark contrast to Bitcoin, where a maximum of 21 million coins can be mined, and new allotment becomes increasingly complex each year. Furthermore, it contrasts with Dogecoin, where issuance is entirely unlimited. The computers on the network mine Ether coins and other cryptocurrencies where they use mathematical calculations to unlock coins or fractions of coins. That setup, however, is changing. To mine new coins and validate transactions, both the Bitcoin and Ethereum blockchains employ proof of work. It is a costly, energy-intensive, and time-consuming process that has the potential to clog the network. As a result, the minds behind Ethereum have decided to switch to a proof-of-stake system dubbed Ethereum 2.0. Miners will find it challenging to generate new coins under the new system. Instead, those who own the currency stake their crypto holdings to validate transactions. Stakers may lose money if they verify transactions that do not follow Ethereum's rules. It is expected that the switchover and transaction fees being burned, permanently destroyed, will result in the fewer Ether in existence and a deflationary spiral, causing the cryptocurrency to soar. What is the difference between Ether and Ethereum? Ether can be used in financial transactions, as an investment, or as a store of value. Ethereum is the blockchain network where Ether is stored and traded. However, as previously stated, this network provides a variety of other functions in addition to ETH. These can be simple fund transfers, but they can also be complex transactions that do anything from exchanging assets to taking out loans to purchasing a piece of digital art, says Boaz Avital, Anchorage's head of product. The Ethereum network processes and stores the transactions. The Ethereum network can also be used for data storage and the execution of decentralized applications. People can host applications on the Ethereum blockchain rather than on a server owned and operated by Google or Amazon, where only one company controls the data. This gives users control over their data and allows them to freely use the app because there is no centralized authority managing everything. Self-executing contracts, also known as smart contracts, are among the most intriguing use cases for Ether and Ethereum. Two parties agree to deliver goods or services in the future, just like any other contract. Unlike traditional contracts, no lawyers are required. The contract is coded on the Ethereum blockchain by the parties. When the conditions of the agreement are met, it self-executes and delivers Ether to the appropriate party. The advantages of Ethereum. The existing network is extensive. The benefits of Ethereum include a tried and true network that has been tested over years of operation and billions of dollars in value trading hands, says Ken Fromm, Director of Education and Development at the Enterprise Ethereum Alliance. It has the largest ecosystem in blockchain and cryptocurrency, as well as a large and committed global community. A wide range of functions is available. Ethereum can be used to process other types of financial transactions, execute smart contracts, and store data for third-party applications, in addition to being used as a digital currency. Constant improvement. A sizable community of Ethereum developers is always looking for new ways to improve the network and create new applications. Because of Ethereum's popularity, it is often the preferred blockchain network for new and exciting, but sometimes risky, decentralized applications. Avital explains. Avoids the use of intermediaries. The decentralized network of Ethereum promises to free users from third-party intermediaries, such as lawyers who write and interpret contracts, banks who act as intermediaries in financial transactions, and third-party web hosting services. Disadvantages of Ethereum. Increasing transaction costs. The increasing popularity of Ethereum has resulted in higher transaction costs. Ethereum transaction fees, also known as gas, reached a record high of $23 per transaction in February 2021, which is great if you're a miner, but not so great if you're trying to use the network. Unlike Bitcoin, where the network rewards transaction verifiers, Ethereum requires those involved to pay the fee. Crypto inflation is a possibility. While Ethereum has an annual limit of 18 million Ether, there is no lifetime limit on the number of coins created. This could imply that, as an investment, Ethereum will behave more like dollars and will not appreciate as much as Bitcoin, which has a strict lifetime limit on the number of coins that can be created. Developers face a steep learning curve. As developers transition from centralized processing to decentralized networks, Ethereum can be difficult to learn. The future is unknown. Ethereum is still evolving and improving, and the ongoing development of Ethereum 2.0 promises new functions and increased efficiency. On the other hand, this major network update creates uncertainty for apps and deals currently in use. According to Gary DeWall, chair of Caten's Financial Markets and Regulation Group, many new validators will be required for Ethereum 2.0 to function. The question is whether the migration will be successful. There are a lot of new elements that need to come together. How to purchase Ethereum. It's a common misconception among newcomers to the Ethereum network. You don't buy Ethereum, you buy the network. Instead, you purchase Ether and use it on the Ethereum network. Because of Ethereum's popularity, it's effortless to obtain Ether. Number 1. Select a cryptocurrency exchange. To buy and sell various cryptocurrencies, crypto exchanges and trading platforms are used. Among the larger exchanges are Coinbase, Binance, and Kraken. If you only want to buy the most popular coins, such as Ether and Bitcoin, you should use an online brokerage like Robinhood or SoFi. Almost always, you will have to pay some trading or processing fee. Number 2, make a monetary deposit. To fund Ether purchases, you'll need to deposit cash, such as dollars, into your trading platform or link your bank account or debit card. Number 3, purchase Ether. After you've funded your account, you can use the funds to buy Ether at the current Ethereum price, as well as other assets. Once you have the coins in your account, you can keep them, sell them, or exchange them for other cryptocurrencies in the future. Keep in mind that whenever you sell or trade cryptocurrencies, you may be subject to taxes. Number 4, use a wallet. While you could store the Ether in the default digital wallet of your trading platform, this poses a security risk. If the exchange is hacked, anyone can easily steal your coins. Another option is to move coins that you do not intend to sell or trade anytime soon into another digital wallet or a cold wallet that is not connected to the internet for safety. Should you invest in Ether? According to DeWall, there are several reasons why you should consider investing in the Ethereum network. First, it has value and use as a virtual currency. Second, the Ethereum blockchain may become more appealing when it migrates to the new protocol. And third, demand for ETH may increase as more people use Ethereum distributed apps, he says. Aside from purchasing Ether directly, you could also consider investing in companies developing applications that use the Ethereum network. If you want assistance managing your investment, you could also invest in a professional investment fund like the Bitewise Ethereum Fund or Grayscale Ethereum Trust. However, these are currently only available to accredited investors. Before making any significant investment in Ether or other cryptocurrencies, consult with a financial advisor about the risks involved. Given the high risk and volatility in this market, even if you believe in Ethereum's potential, make sure it's money you can afford to lose. Speculators can invest directly in cryptocurrencies like Ethereum, but they can also invest in companies that may benefit from a shift toward digital currencies. Whether you're trading Ethereum, Bitcoin, or any other cryptocurrency company, it's critical to understand the risks, which include the possibility of losing your entire investment. Given the volatility and numerous risks associated with cryptocurrency, investors should proceed with caution. Those looking to get a taste of the action should not put more money at stake than they can afford to lose. We will teach you the fundamentals of financial terminology and how to get started. You'll also learn about cryptocurrency trading and investing, growth stocks, and how to be economically confident. So be sure to subscribe so you don't miss a single upload. For the time being, sayonara. Who let the Doge out? The rate of cryptocurrency Dogecoin has risen using eye-popping quantities since the start of the 12 months. Should investors be piling in? Was it first created as a comic story version of Bitcoin? Is now the moment to influence clear in anticipation of a main price correction? Or should the whole cryptocurrency idea receive the widest of berths? Hello, this is Financial and Investment Wisdom. And for today's video, we are going to talk about everything that you need to know about Dogecoin. But before we dig into that, please make sure to subscribe to the channel and turn on the notifications to be notified every upload. Would you believe if I tell you that Dogecoin started as a joke, but now it's a world-recognized project? Dogecoin has seen an excellent journey from starting as an amusing idea to donating $100,000 to charities to turning into a vital player inside the WSB Reddit force. Only time will tell while the following Dogecoin breakout will arise. However, if it's something like the previous couple, it will likely be a major occasion. From latest history, this seems it could be prompted by using a single Elon Musk tweet. Still don't believe me? Well, let us have a quick recap of its history. Dogecoin is the new Bitcoin. Perhaps it's too early to say that. However, within the next few months, Dogecoin may become the cryptocurrency of 2021. It's already in direction, witnessing a huge surge since the start of the 12 months. Dogecoin has given nearly 1,900 consistent with cent returns since January 2021. Sure, you study that, right? There was a time when one coin was worth less than a cent, but the recent surge has taken its price to 12 cents. That's extremely good for a digital currency commenced as a funny story. We can get to that in a little bit. In line with the report published by stock market news site Benzinga, on Tuesday, the cryptocurrency soared to almost 1,900 according to Cent. When you consider the beginning of 2021, the leap is considerable for the reason that Bitcoin has seen a surge of 117. That is a 47% increase. Yes, Bitcoin has come in an extended manner and is tipped because cryptocurrency is a good way to define the future, but one cannot predict the impact Dogecoin will have. As they have said, it started as a joke, now a phenomenon. Dogecoin began as a shaggy dog story via software engineers Billy Marcus and Jackson Palmer as a joke and on-the-spot cryptocurrency in December 2013. When you have been using the internet, there may be a chance that you may have come across or heard about the Doge meme. It featured the enduring sheep. Palmer, an Australian marketer, jokingly combined two of the net's most talked about topics, cryptocurrency and Doge. Invest in Dogecoin, Palmer tweeted. Quite sure it's the next big element. The tweet became observed via a whole lot of people on the net who began speaking about Dogecoin. Palmer saved the shaggy dog story going by way of buying Dogecoin.com area and uploaded a photoshopped sheep on a coin. Billy Marcus, running as a software program engineer at IBM, saw a note left by Palmer. He tried to get in contact with him, but commenced operating on Dogecoin after failing to pay attention. Marcus has admitted to usage of Bitcoin's open source code for growing Dogecoin. He changed a few factors and made 100 billion Dogecoins in opposition to 21 million Bitcoins. Also, he made them easier to mine. Dig? Marcus changed the phrase mine with dig due to the fact that dogs don't mine, they dig. A lot of people also believes and claims that Reddit made it happen. Even if Marcus and Palmer had the Dogecoin geared up, they had been no longer taking it seriously or had any plans of selling the currency. Steps in Reddit. Sure, the same platform you came throughout while for the duration of the GameStop saga. The Dogecoin subreddit exploded nearly at once, giving them the eyeballs and sources had to make a crypto successful. Reddit users started sending every different Dogecoin as a token of admiration or affection. The continuous change of Forex on the platform made it famous and expanded its user base. The recent fame, no matter its strong presence on Reddit, still leaves many people not taking Dogecoin significantly, and its use case remained confined. Its miles are listed as a meme coin until this year, while its Tesla leader Elon Musk tweeted that he's positioned a Dogecoin at the moon. A few thought it was an April Fool's Day prank, but Musk has his own account and then made numerous cryptic tweets discussing the cryptocurrency. Few different celebrities hopped directly on the bandwagon. The Dallas Mavericks, owned by Mark Cuban, introduced the crew would be accepting Dogecoin as charge. Rapper Snoop Dogg and rock band Kiss bassist Gene Simmons cited it on Twitter. A current TikTok trend is also believed to have caused a spike. The viral TikTok app advocated people to buy Dogecoin. Hello there, pal! Before we proceed and talk about the advantages and disadvantages of Dogecoin, please hit the thumbs up button down below if this video has helped you to further understand Dogecoin. And please feel free to share your thoughts on the comment section down below. Now, let us go back to our discussion and talk about the advantages of the Dogecoin first. Of course, is its growing community of users. One of the benefits of Dogecoin is that it has a long-time network of customers and supporters. It is one of the pinnacle 10 cryptocurrencies within the globe in terms of market capitalization. It even ranked 4th on one occasion. Cuban and Musk defined that its developing person base makes it an excellent medium of change. Notice that the network donated well worth $30,000 to fund the experience of the Jamaican bobsled group to the 2014 Sochi Winter Olympics. Every other donation worth $11,000 to construct a property in Kenya, and any other really worth $55,000 to sponsor NASCAR motive force Josh Sensible. Next is the decentralized exchange compatibility. This cryptocurrency can be transacted and traded on decentralized exchanges. Specifically, the Rent project has enabled it to work on the Ethereum blockchain platform and access the decentralized finance network. This means that it is compatible with the emerging decentralized finance movement within the cryptocurrency market. In addition, although it cannot interact with smart contracts directly because it runs on its blockchain with no built-in smart contracts feature, it can be wrapped, thereby locking it in a state and operable with a contract until it is later released. It has the positive side of volatility. Cryptocurrencies are extraordinarily risky via default because of their sensitivity to speculation-related occurrences, increasing competition depth, and absence of widespread consensus as a collective class of assets. Nevertheless, their historic performances have scaled extreme highs and surprising price drops inside brief durations. The identical is authentic for Dogecoin, but volatility can have some benefits, especially for day buyers or those folks that purchase and sell property inside in the future. Rate swings in a given day can permit cryptocurrency traders to earn big gains via day buying and selling. And now let us move forward to the disadvantages of the Dogecoin. The first downside is that it has no supply cap. The shortage of a supply cap is one of the biggest negative aspects of Dogecoin. Unlike Bitcoin and the ADA cryptocurrency of Cardano, which might be deflationary because they've got a predefined cap on supply to create scarcity and doubtlessly increase its value in the future. It's miles deflationary. cryptocurrencies with no delivery cap are unideal belongings to hedge against inflation. Moreover, the continuously developing supply will ultimately require extra expensive blockchain mining sports. Because this cryptocurrency uses an evidence of work mechanism to obtain consciousness, it will require further increasing its pool of miners and their effective computers to handle increasingly more transactions in the future. Criticisms of Dogecoin. The mainstream media and financial specialists had a hard time taking this cryptocurrency seriously. A handful of analysts have initially referred to that as pump and sell-off behaviors and better sensitivity to speculations and fads pushed via herd mentality. Others name it a pyramid scheme. In his 2021 article posted by way of Foreign Policy, David Gerard argued that there is no right use for cryptocurrencies besides trading. He argued in addition that those assets have no use cases. People unfamiliar with what they are doing and truly joining the bandwagon regularly fall prey to private finance and investment fads. Poor technical support. Dogecoin has surprisingly poor technical support in spite of its developing community of customers and supporters. The development team is not as massive as Bitcoin, Ethereum, and Cardano. Furthermore, the product roadmap isn't always as clear as those cryptocurrency marketplace giants. There were no key technological updates and traits since 2015. It is also essential to highlight that it does not provide any unique promoting proposition in terms of technology. The suggested goals or aspirations of this cryptocurrency and the whole blockchain platform aren't as ambitious in comparison to major players. Typical novelty is truly one of the key blessings of Dogecoin. The reality that it began as a shaggy dog story and has referenced an infamous meme has catapulted it to mainstream recognition. Moreover, the same mainstream attraction has piqued the hobby of individuals and allowed them to discover and apprehend cryptocurrencies further. Of course, it shares the criticisms of cryptocurrencies, the risks or factors affecting the cryptocurrency market, and the risks of blockchain generation. But compared to other cryptocurrencies, one of its foremost drawbacks is that it won't be a worthwhile asset to spend money on or exchange due to its hype-driven value and sensitivity to speculation-related occurrences. That's it for today's video. If you like this video, please make sure to subscribe to the channel and turn on the notifications to be notified of every upload. This is Financial and Investment Wisdom, and we will see you on our next video. Cardano is frequently regarded as the first of the next generation of cryptocurrency in the relatively young cryptocurrency world as an investment vehicle. While most cryptocurrencies have seen the volatility, bad press, and scandals that have become almost synonymous with cryptocurrency investing, Cardano aims to provide a more balanced and sustainable ecosystem for cryptocurrencies. The Financial and Investment Wisdom channel is all about making better financial decisions. If you're looking for financial literacy, growth investing, trading, or want to improve your finances, this could be a great one for you. What exactly is Cardano ADA? Charles Hoskinson, a mathematician and co-founder of Ethereum, founded Cardano. Cardano's vision, according to their website, is to create a blockchain platform for changemakers, innovators, and visionaries, with the tools and technologies required to create a possibility for the many as well as the few and bring out positive global change. Cardano is a blockchain open-source framework built in layers to run financial applications used by businesses, customers, and governments worldwide. It can be used to send and receive digital money, ensuring quick, direct, cryptographically secure transactions. The project has layered growth, allowing dedicated coders and developers to manage and update the blockchain with soft forks quickly. ADA represents the token. Individuals with small payments can use the Cardano blockchain to create smart contracts, decentralized apps, and protocols and send and receive funds instantly. The Cardano utility token ADA, like several other tokens, is used as a value switch. However, it differs from other cryptocurrencies in terms of functionality. Furthermore, users who participate in safety services are rewarded with ADA tokens. ADA holders, for example, use their coins to vote on protocol improvements or amendments, thereby participating in its development. Cardano is the first blockchain platform to be founded on peer-reviewed scientific research. Academic research guides the entire project, and all platform integrations and implementations are first researched, mathematically modeled, tested and challenged before entering development. Cardano's cryptocurrency token is called ADA. This contrasts with the more familiar relationship between Bitcoin and Ethereum, in which the organization and token share the same name and are used interchangeably. Cardano and ADA have a relationship similar to Ripple, the organization, and XRP. ADA is named after Ada Lovelace, a 19th century mathematician and the world's first computer programmer. How does Cardano function? Cardano is frequently referred to as the next generation cryptocurrency. Cardano, created with the Haskell programming language, prides itself on being technologically realized through evidence-based science. The blockchain platform is based on the Ouroboros consensus protocol. According to Cardano, this enables the blockchain to address one of the fundamental challenges of earlier generation blockchain networks: high transaction fees due to increased transaction volumes. In addition to faster processing speeds, Cardano hopes to reduce energy costs by streamlining transaction processing. According to Cardano, their blockchain provides opportunities beyond the world of finance with which cryptocurrencies are typically associated. They see blockchain applications in education, retail, agriculture, government, and healthcare. What am I able to do with Cardano ADA? Cardano believes that the Cardano blockchain and the ADA cryptocurrency token will have applications in the following fields: education. Academic certifications are currently centralized and entirely controlled by the educational institution that issues them. Cardano allows students to decentralize these certifications, giving them control and ownership as the actual owners. Cardano believes that a blockchain solution would secure these certifications and enable students to quickly and easily share them with whomever they choose. Retail. Cardano sees itself as a valuable tool in the fight against the production and sale of counterfeit retail goods. Given the sophisticated nature of goods production and online sales, Cardano believes its blockchain will be a powerful solution to ensure the labeling of original goods being produced. The Cardano blockchain would include a tamper-proof solution that provides the authenticity of retail goods manufactured anywhere in the world. Finance. Anyone who has attempted to open a bank account in a traditional bank knows that it's time-consuming and can take days, if not weeks. Cardano believes that allowing users to store credentials and securely identify documents on their blockchain can reduce the friction and time required to complete simple tasks such as opening a new bank account. Investment. But what if you don't work in these fields or want to set up suck processes? Can you still be involved with Cardano and ADA? The answer is unequivocally yes. ADA serves as a store of value for the rest of us who aren't interested in financial regulation or product counterfeiting prevention. Like Bitcoin and all other cryptocurrency tokens, you could invest in Cardano by purchasing ADA and potentially reap the benefits of its value rises. How can I invest in Cardano? You can easily invest in Cardano through one of the cryptocurrency exchanges because it is a popular cryptocurrency listed on most of them. Crypto exchanges may have had a bad reputation at the start of the crypto era because they were unregulated, but they are now entirely safe. If you want to invest in Cardano, you could do so easily with eToro, one of the most popular platforms globally. Before investing in Cardano, here are some pointers. Number 1, obtain a cryptocurrency wallet. Unlike other major cryptocurrencies such as Bitcoin and Ethereum, Cardano has its cryptocurrency wallet for ADA. Users receive more than just a wallet with Daedalus. They also run a full blockchain node, giving them complete control over their funds and the ability to maintain accountability over the Cardano blockchain. Furthermore, Daedalus is the only wallet where ADA holders can participate in Cardano's stacking scheme. As previously stated, Cardano uses a POS blockchain protocol so token holders can earn incentives inside the Daedalus wallet for either delegating ADA or running a staking pool. If you don't want to use Daedalus, you can choose from various other digital or hardware wallets. Number 2, try to keep your initial investments as low as possible. After several weeks of intensive research, you may feel as if you know almost everything there is to know about crypto investing. You may see a lot, but that doesn't mean you should spend recklessly. Ambiguity is implicit in all investments, including Cardano investing. Digital currency is evolving, and you must proceed with caution. There are extremely high risks involved, which means you could either win big or lose all of your money. Spend small amounts at first to see how things go before increasing your spending. Number 3, maintain your patience. Unless you are drawn into day trading and are drawn in by the adrenaline of quick exchanges, it is prudent to consider holding your Cardano coins. This option is more risk-averse, especially for beginners who will want to familiarize themselves with the market. It makes it easier to anticipate significant value increases. With the high expectations for Cardano, any persistence for higher premiums may be worthwhile. Number 4, stay up to date. Making investment decisions based on the price of the coins is a common mistake made by inexperienced crypto investors. A cryptocurrency's valuation is only correct if the existing circulating supply is taken into account. If you're thinking about buying Cardano, try not to rely too heavily on the coin's current valuation, and instead think about how much of the overall market cap you're buying. Number 5, Cardano may be subject to tax laws. For tax purposes, the IRS issued a notice in 2014 stating that cryptocurrencies are property rather than cash. If you discarded or purchased ADA by cashing it out on an exchange or acquiring goods and services, and the realized value is greater than the price you bought the cryptocurrency, you will be required to pay taxes. You may have a taxable capital benefit from any short-term or long-term rate. Maintain close oversight of your cryptocurrency operations to ensure that you stay on the right side of the law. What is Cardano's next step? Cardano has outlined a 5-stage development roadmap for their future, named Byron, Shelley, Gauguin, Basho, and Voltaire. Byron's first stage has been completed, allowing users to purchase ADA when it first launched and store it on their Daedalus wallet. This was their initial growth phase, which propelled ADA international and established them as one of the top most popular cryptocurrencies in the world. Cardano is now simultaneously working on the Shelley and Gauguin phases of the roadmap. The Shelley stage introduced new features, such as a reward system, to increase community adoption and encourage more people to join the network. According to their claims, the work in this era will ensure the decentralization of the blockchain while also ensuring that it remains up to 100 times more decentralized than any other network. The Gauguin phase, which is also currently in development, introduces intelligent contracts to the Cardano blockchain. A brand new intelligent contract development language and execution platform will be presented as part of this. Cardano also intends to create new cryptocurrencies on its network, with the ultimate goal of attracting people from all walks of life to its platform to use its apps. The network will become completely self-sufficient and independent in the final stage of the Cardano roadmap, known as Voltaire. This stage of Cardano's roadmap is likely to take several years before it even begins, which is another way of saying that the only way to know how successful and mainstream Cardano will be is to join them on their journey. That is precisely what a large number of ADA investors are doing. Finally, Cardano has a good chance of gaining an equal share of the cryptocurrency market. As a result, it is an excellent option for traders and new entrants who have recently entered the cryptocurrency market. On the other hand, ADA remains one of the best options for traders looking to diversify their investments. We will teach you the fundamentals of financial terminology and how to get started. You'll also learn about cryptocurrency trading and investing, growth stocks, and how to be economically confident. So be sure to subscribe so you don't miss a single upload. For the time being, sayonara. XRP undoubtedly has made quite a clamor and is considered as one of the success stories in the crypto world. Aside from the huge community of investors and supporters behind this platform, it is also one of the most controversial. Let's have a look at 10 important things about XRP. Before moving ahead, welcome to Financial and Investment Wisdom. In this video, we will discuss XRP Ripple Deep Dive. So please take a brief moment, go down and touch the like button, and if you have not subscribed to our channel yet, go to subscribe to stay connected. XRP is one of the top 10 cryptocurrencies right now. If the name doesn't ring a bell, you may be more familiar with Ripple, the company that created it, even though cryptocurrency is called XRP. Some people confuse the terms XRP and Ripple. XRP is the digital currency on the market that continues to attract attention. XRP has a lot of space to develop, thanks to its solid use case and high-profile banking collaborations. However, there are numerous roadblocks that could slow it down. There are a few things you should know about it before making it your next cryptocurrency investment. Here are the 10 things you need to know about XRP cryptocurrency. So, let's start from number 10. XRP is the only digital asset particularly designed for financial institutions and payment providers. A lot of digital assets aren't clear about what they're for. They can be used to store value, buy commodities, or conduct consumer transactions, but they were not designed with a specific purpose in mind. XRP, on the other hand, is focused on value transfer and is designed for businesses making it digital assets with real-world use. One of the most significant aspects to consider while investing in crypto is the coin's purpose. Many fail in this area because they lack a defined function or perform differently than dozens of other coins. Banks and other financial institutions can send money without pre-funding accounts in other countries or paying high foreign currency rates by utilizing XRP. Number 9. XRP is the most scalable digital asset. XRP is the digital asset that is the fastest and most scalable. As a result of its 5-year track record of dependable technology and governance, it is suitable for institutional and enterprise deployment. Since the company's start, all ledgers have closed successfully. The XRP ledger, in addition, can manage 1,500 transactions per second, 24 hours a day, 7 days a week, and can scale to handle the same throughput as a Visa. At the same time, other digital assets have struggled to build a compelling use case. XRP is an amazing digital asset for payments, and as a result, it is the most important digital asset for the Internet of Value. Number 8. The SEC has filed a lawsuit against Ripple. As a result, Ripple has found itself entangled in a legal battle with the Securities and Exchange Commission. The complaint, which was filed in December 2020, claims Ripple of selling unregistered securities worth $1.3 billion, which the company denies. The unregistered security in question is the XRP cryptocurrency, which is decentralized digital money. Ripple has defended itself by claiming that the XRP cryptocurrency is not a security. This legal proceeding is still underway. However, while it is a cause to be wary about XRP, it might also be a reason to invest if you believe the lawsuit will be decided in the company's favor. A good judgment for Ripple could result in a surge in the price of the cryptocurrency XRP. Additionally, after the case is concluded, Ripple intends to go public through an initial public offering IPO, which may also impact the price of XRP. Number 7. XRP enables faster, reasonable, and more reliable cross-border payments. The XRP cryptocurrency provides banks and payment processors with an on-demand, dependable source of liquidity for cross-border payments. Currently, it takes approximately 3 to 5 days to transmit money from one nation to another through a bank, which frequently entails high costs and the danger of the payment being delayed, among other things, or never going through altogether. Instead, corporations can pre-fund nostro accounts in the recipient's nation, which prevents them from using their available cash flow. XRP is a system component that addresses all of these issues with an average settlement time of 4 seconds and at a fraction of the cost of current solutions. The ability to obtain liquidity on demand and in real time without the need to pay foreign transaction fees or pre-fund nostro accounts. It would enable financial institutions to expand into new markets, cut foreign currency expenses, and provide speedier payment settlements for their customers. Number 6. It is also part of an overall network solution for quicker cross-border payments. Ripple is committed to resolving the challenges associated with cross-border payments and establishing an internet of value. As a result, money can be moved as effectively as information can be exchanged. The approach entails developing a common payment standard and XRP, which is the digital currency that will connect the various ledgers and blockchains that are currently disconnected. Hold on. Please click the subscribe button to get notified of more updates. And do you have any questions so far? Tell us in the comment below. We will respond to you as soon as possible. We are now moving towards number 5. It acts as an amazing bridge between fiat currencies. Some digital assets, such as Bitcoin, are intended to take the role of existing government-backed currency systems. XRP is used in conjunction with fiat currencies on more than 10 digital exchanges to aid in transferring money across borders in a timely and effective manner. For example, to pay a supplier in Korea today, a Mexican company would either need to pre-fund an account in Korea or would need to go via a foreign currency provider, such as a bank, to do so. Both options are prohibitively expensive and time-consuming. The company's Mexican bank or local payment provider can make payments instantaneously and on demand, thanks to XRP, because there are no account pre-funding or foreign exchange expenses associated with XRP. It allows for faster and more affordable settlement. Number 4. XRP scales are faster than Bitcoin. Bitcoin may conduct up to 7 transactions per second, each of which can take more than 2 hours to complete before it's considered complete and valid when compared to a standard payments provider like Visa, which processes an average of 2,000 transactions per second. It is clear that Bitcoin does not have the scalability to meet the majority of customers' needs. The 2 most significant advantages of XRP are the speed with which transactions are completed and the low cost of each transaction. A normal transaction on Ripple costs 0.00001 XRP, 100%. This is a fraction of a penny at the current XRP price of under $1, which is negligible. Transactions take an average of 5 seconds to complete. In general, XRP is a fairly efficient method of transferring funds. Number 3. It's secure. The XRP ledger is the location where XRP transactions take place and are documented. It is an open source code base maintained by a community of trustworthy validators and a team of full-time engineers who are actively involved in the development and maintenance because it has decentralized the XRP ledger from the beginning. This has made it more resilient and resistant to a single point of failure. This process continues today. Number 2. XRP is more sustainable than mining digital assets like Bitcoin. Bitcoin is a mined digital currency. New coins are constantly being created by massive data centers performing challenging math problems, often known as proof of work, to produce new Bitcoins. This inefficient method consumes large quantities of electricity. The cost of creating one coin could power 3.67 U.S. households a day. It has been dubbed unsustainable because of the massive amount of electricity it consumes. Given that XRP is not a digital asset that can be mined, every single unit of the currency that currently exists has already been created, with the vast majority of the currency being owned by Ripple, 55 billion of which has been placed in escrow, and the remaining units being held by businesses and individuals. Number 1. XRP is the future. It will be interesting to observe who are the winners in the digital asset arena as it is a question of when banks and other financial institutions begin to use digital assets in their day-to-day business operations. We believe XRP will flourish because it serves a function relevant to businesses and consumers worldwide, allowing financial institutions to transmit money across borders swiftly, cheaply, and easily. Several cryptocurrencies, including XRP, have surpassed their previous highs in 2021, but XRP is an outlier. In January 2018, it achieved a high of $3.84 for a brief period. XRP's price has mostly tracked the rest of the crypto market's ups and downs. It is peaking at $1.96 in April of this year. At the time, it was trading at around 84 cents. The SEC lawsuit is most likely to blame for XRP's lower gains relative to other coins. Okay guys, summarizing today's video. Nowadays, Ripple operates on more than 200 banks, money service companies, and payment companies in the US, Middle East, Europe, Brazil, and North Africa. Ripple and XRP have a lot to offer, attracting millions of individuals from all over the world. However, since it is one of the biggest communities in the crypto world, it can use some advancement. Yet, controversies encompass the Ripple and XRP. Without a doubt, it is a trusted exchange platform. The future and success of XRP may be ambiguous. However, with its effective software and its increasing popularity in the US, it is safe to say that soon it'll dominate a much larger scale in the crypto world and the market. So, guys, do you have any questions regarding XRP? Do not hesitate to add your queries in the comments section. If you have not subscribed to our channel yet, then subscribe and hit the notification button to get alarmed with our latest content. If you want to make money and enjoy financial freedom, then financial and investment wisdom is for you. Thanks for your time. Be happy.
Because of its spectacular ascent over the previous year, the word Bitcoin appears to be on everyone's lips. But what exactly is Bitcoin? And why is it often used interchangeably with words like cash and gold? Let's have a look at this today. Before moving ahead, welcome to Financial and Investment Wisdom. In this video, we will talk about Bitcoin versus Bitcoin Cash versus Bitcoin SV. So please take a brief moment to go down and touch the like button, and if you have not subscribed to our channel yet, go to subscribe to stay connected. Since 2017, 3 major implementations have been competing for dominance: Bitcoin BTC, Bitcoin Cash BCH, and Bitcoin Satoshi's Vision BSV. While the 3 coins have certain common characteristics, since they are all parts of the same network, they are very different from one another because they have different goals. Before we go into their differences, let's take a look at what Bitcoin forks are and why they're so important to understand. Bitcoin forks are sort of copies of the original BTC-powered blockchain. Forks happen when the Bitcoin community disagrees on the way forward. When the Bitcoin community disagrees on how and where to proceed, forks occur. As a result of this squabble, the original blockchain and its freshly changed version are going in different directions. It's similar to the early evolution of humans from apes. Different species of primates forked away from one another. Now these forks are also of 2 different types: hard forks and soft forks. A soft fork modifies a blockchain's code in a very modest way without creating a new chain. On the other hand, a hard fork includes substantial and controversial code modifications to the existing blockchain, enabling the formation of a new chain. After a hard fork, there is no restoration between the 2 networks, and the new network is free to trace its own course and define its own rules for the future. Let's look at what Bitcoin and Bitcoin Cash are now that the forkings are over. Because many new investors in cryptocurrencies are confused about which is the real Bitcoin or Bitcoin Prime among the others available, it is important to understand their differences. Bitcoin versus Bitcoin Cash. As you may be aware, Bitcoin BTC was initially introduced in January 2009, and while it was praised as a revolutionary new peer-to-peer electronic payment system that would challenge banks and the financial system as we know it, its flaws rapidly surfaced. Bitcoin Cash is the second largest fork of the Bitcoin network, behind BTC. Surprisingly, the community had to endure nearly 7 years of controversy prior to the division from 2010 to 2017, before BCH debuted in August 2017. The transaction fees are one of the most noticeable differences between Bitcoin and Bitcoin Cash. Although the charges fluctuate based on the level of traffic on each blockchain, the Bitcoin network has higher transaction processing fees than Bitcoin Cash. However, because the Bitcoin Cash platform's transaction volume is just marginally higher than that of BTC as of March 2021, this may not be a big selling factor. A transaction on the Bitcoin Cash platforms is likely to cost roughly $0.0027, while a similar exchange on BTC requires a network fee of around $20 and could go even higher during 2021. To solve the first decentralized platform's high exchange fees, BTC developers presented LN, the Lightning Network, a second layer scaling solution. It sits on top of the main chain and works using payment channels. As a result, it helps drive Bitcoin exchange fees lower and increases its exchange speed. LN continues to pick up momentum with its developing number of nodes and payment channels. Moreover, cryptocurrency exchanges like OKEX and Bitfinex have grasped the solution, giving cheap and speedier Bitcoin deposits and withdrawals. Bitcoin can handle 7 transactions per second, whereas the BCH-powered platform can handle 116 transactions per second on average. The Lightning Network potentially improves BCH by allowing billions of transactions per second, but it is still far from being ready to handle that volume of traffic. The mempool is another important metric to compare between the 2 platforms. A mempool is a virtual place where valid but unconfirmed transactions waiting to be included in a block were stored by a decentralized system like Bitcoin or Bitcoin Cash. The larger the number of transactions in the memory pool, the more network congestion there is. Network nodes define a transaction cost threshold to reduce congestion in the network. Below this threshold, all transactions are deleted from the pool. In this case, Bitcoin Cash wins over BTC, since it has a less congested mempool. The most important difference between the 2 is that Bitcoin Cash has a considerably bigger block size, allowing it to incorporate more transactions in the set and so expand the network more effectively. Because of this difference, they are non-interchangeable, independent, and unique cryptocurrencies. In brief, the Bitcoin Cash discussion reveals that increasing the block size would make the cryptocurrency more user-friendly, allowing people to use it as transactional money in everyday situations. In many respects, Bitcoin Cash and its parent Bitcoin are technically similar. For example, they both use POW as a consensus process, with the SHA-256 algorithm as the primary focus. They also both have reward halving during certain periods. I hope you've understood the difference between Bitcoin and Bitcoin Cash. Now we're going to look into the differences between Bitcoin and Bitcoin SV. But before that, please click the subscribe button to get notified of more updates. And do you have any questions so far? Tell us in the comments section below. We will respond to you as soon as possible. If you believed the developer squabbles would fade away once BCH split from BTC, you were wrong. Technical changes to the Bitcoin Cash blockchain that were proposed, such as plans to ensure transactions had a specified order inside a block, and a goal to deliver smart contract functionality, did not receive broad popularity. Another hard fork, this time from the Bitcoin Cash blockchain, came as a result of this. What exactly is Bitcoin SV? Well, it was sworn to fully follow Satoshi Nakamoto's Bitcoin white paper, which was first released in October 2008. Furthermore, Bitcoin SV's huge block size allowed it to set a new record when building 16.4 million transactions into a single block. BSV claims to be ready to replace every payment system on the planet, with a better user experience, lower retailer costs, and a higher degree of security. However, according to data, transacting on Bitcoin is over 11,000 times more expensive than transacting on Bitcoin SV, which might be a deciding factor for those looking to save the expenses. The hard fork warfare, Bitcoin Cash versus Bitcoin SV, has been acrimonious at times. Craig Wright, the creator of Bitcoin SV, has stirred controversy by frequently claiming to be Satoshi Nakamoto, Bitcoin's anonymous creator. He's been accused of being a scam artist. And while BCH is available on major crypto exchanges, firms like Binance have gone so far as to remove BSV from their sites entirely. In 2019, the business stated that Bitcoin SV failed to achieve the high expectations it had set for it, and that trading pairs were halted to safeguard customers. So what is Bitcoin SV's share cost in comparison to Bitcoin? Well, there is quite a big gap. At the time, on September 14, 2021, one BSV share was worth $160, and one BTC share was worth $46,563, meaning it would generally cost 291 BSV shares to get your hands on a single Bitcoin share. On the other hand, Bitcoin SV beats BTC and BCH on exchange fees since it charges the least cost. This decreases the number of exchanges on the mempool, impacting the BSV network's throughput. For example, the network hit 9,000 exchanges per second using the BSV Scaling Test Network, STN. STN could be a venture by a committed organization, Bitcoin Association, that drives adoption for BSV. The BSV scaling product targets corporate BSV utilization and adoption. Overall, you've got to wonder whether the developers who have been coordinating all of these hard forks have considered the possibility that this will make the crypto world indeed more befuddling and difficult to understand for everyday buyers. They all have similar names, which implies that at times, it can feel like you need a PhD in cryptography to wrap your head around the technical subtleties. The three primary Bitcoin protocol implementations are still thriving and competing for dominance in the crypto world. But it's no longer a fight. BTC has obviously won the branding and pricing fights, as it is worth 70 times more than the other two chains combined, but there is still plenty of opportunity in the growing and still nascent digital asset industry for more payment-focused cryptocurrencies like its rival siblings. There's a lot of competition with almost 6,000 cryptocurrencies and numerous other digital assets aiming to offer low-cost, scalable, retail-friendly payment methods. Do you have any questions regarding today's video? Do not hesitate to add your thoughts in the comments section. If you've not subscribed to our channel yet, then subscribe and hit the notification button to get notified of our latest content. If you want to make money and enjoy financial freedom, then financial investment wisdom is for you. Thanks for your time. Be happy.
Whether you're a complete crypto newcomer or a seasoned veteran, you've probably heard of Polkadot. This unique blockchain platform was designed to solve some of the industry's most vexing problems, such as interoperability and scalability. The Financial and Investment Wisdom channel is all about making better financial decisions. If you're looking for financial literacy, growth investing, trading, or want to improve your finances, this could be a great one for you. Blockchains are currently classified into two types. They are purpose-built and designed for a specific function, such as Bitcoin, created as an alternative payment system and a store of value. They can also be more open and general in their operation, allowing them to be applied to a wide range of uses, such as Ethereum or Tron, which can be used to build decentralized applications, basically blockchain-based versions of regular apps. Polkadot, on the other hand, is a blockchain protocol that describes a Layer 0 protocol. In other words, the Polkadot protocol creates an environment in which other blockchains, known as parachains, can operate. It essentially provides the infrastructure for different blockchains to interact with one another securely. Blockchains are unable to communicate with one another. We now have blockchains designed to address a wide range of issues, but there is one major issue: they cannot easily communicate with one another. This is because most blockchains operate as closed ecosystems. What happens on one blockchain has no bearing on what happens on another. Currently, the crypto space resembles a filing cabinet with hundreds of drawers. Each drawer represents a different blockchain going about its daily activities, but you can't move the files between the drawers in this case. What occurs in the drawer remains in the drawer. This is generally since blockchains can differ significantly in terms of how they are built, secured, and governed, among other things, which presents a significant challenge when attempting to get them to exchange data or value with one another securely. However, this closed-off, silly-oid approach is opposed to the way most financial platforms operate today. After all, there are thousands of banks, millions of different stores, and dozens of other payment methods, many of which are interoperable. What makes blockchains any different? Polkadot comes into play here. What makes Polkadot unique? Polkadot's parachain feature allows it to process multiple transactions on multiple blockchains in parallel. Polkadot, dubbed a shared multi-chain network, can assist blockchains such as Ethereum in becoming more scalable. Furthermore, users can easily add custom blockchains to the Polkadot network. To better understand Polkadot's value proposition, it is best to investigate the various issues that have limited and restricted blockchains. Let's get started. Issue number 1: scalability. Because of their structure, most popular blockchains are not scalable. For example, once upon a time, transacting on Ethereum, the world's most popular blockchain, cost only a few pennies to a few dollars ETH equivalent. Today, Ethereum fees can be as high as $250 or more. The vast majority of blockchains face scaling issues in some form or another. Transactions cannot be sped up. And as the demand for transaction processing grows, each transaction becomes more expensive. Bitcoin, which has established itself as a peer-to-peer value transfer medium, can only process 4.5 transactions per second. Ethereum, introduced as Blockchain 2.0, performs slightly better with approximately 12 transactions per second. In comparison, Visa and MasterCard handle up to 2,500 transactions per second. One of the significant impediments to Bitcoin and other cryptocurrencies becoming commercial payment methods is the slow processing of payments. Issue number 2: no or limited communication and interchanging of data. Dozens of blockchains were created in isolation, and they could not communicate or exchange value with one another. On the ETH network, for example, you cannot send BTC. Even with DeFi services that enable working across multiple currencies and blockchains, Oracle services such as Chainlink must be used to obtain accurate real-time data on each coin's current value. Issue number 3: lack of customization. Blockchains did not support any customization of the transfer of value from one owner to another before the arrival of Ethereum. Bitcoin, for example, permitted only peer-to-peer transactions. To a limited extent, smart contracts enable the customization and programming of what can be accomplished on a blockchain. How does Polkadot address these issues? The majority of blockchains excel at a single task. As user adoption grows, many blockchains are being pushed away from specialization and toward generalization to remain competitive. Adding new features on top of legacy blockchains typically consumes significantly more network resources and is ineffective. Polkadot is a blockchain network focused on underlying processes like interoperability and communication, security, scalability, and transaction verification. Other cryptocurrency projects with blockchains can use Polkadot to focus on their core competencies rather than build subpar features for integration and scalability. Polkadot provides critical infrastructure that other blockchains can leverage to improve their security, speed, upgradability, and overall capabilities. It accomplishes this by using 4 major components: the relay chain, parachains, pair threads, and bridges. Polkadot Relay Chain. The primary architecture that holds everything together is the relay chain. Polkadot primarily uses the relay chain to verify transactions, much like Bitcoin and Ethereum do with proof of work and proof of stake (POS) processes. Users on Polkadot can stake the native token DOT to help with transaction verification. The relay chain level, as the central component of Polkadot, coordinates the system as a whole, performing essential functions such as transaction verification and making decisions on how to run the entire Polkadot architecture. At this Polkadot layer, there aren't many programmable or customizable options. Parachain. A parachain is a fully functional blockchain application that runs on top of the relay chain. Polkadot describes it as an application-specific data structure that is globally coherent and validatable in its white paper. The relay chain, also known as the base layer, is in charge of each parachain's security, transaction validation, and governance. The parachain blockchain network is similar to other blockchain networks such as Bitcoin or Ethereum blockchain. Polkadot is unique in that it can contain multiple blockchains. It could theoretically house both the Bitcoin and Ethereum blockchains within itself, with each serving as a parachain. Suppose both the Bitcoin and Ethereum blockchains are in parachains within Polkadot. In that case, they will communicate and even pass transactions from one to the other. Imagine converting PTC to ETH without an exchange. The blockchains communicate using the XCMP protocol, which stands for Cross-Chain Message Passing. The Polkadot community auctions off a limited number of slots available on the parachain level. Parachains provide a one-of-a-kind level of security. In theory, a 51% attack can be used to compromise the Bitcoin blockchain. The collective nature of parachains within the overall security structure of the relay chain could prevent such an attack. Parathreads. Parathreads are temporary Polkadot network slots that are primarily used to test out ideas. Parathreads, like parachains, enable the creation of a special-purpose blockchain or application. The distinction between parathreads and parachains is that parachains are more resource-intensive and permanent than parathreads. Parachains necessitate a significant initial investment to cover the high throughput. Parathreads have the same API and functionality as parachains, but on a pay-as-you-go basis, Polkadot says. Parathreads also enable smaller community projects that would not compete in an auction for a unique parachain. These projects can experiment and demonstrate efficacy with parathreads before committing to the upfront costs of a parachain. Because parathreads must share scarce resources among various parathreads running on a specific parachain, the communities on each parathread must compete for resources and pay the owners of the hosting parachains for each other processing block. Parachains with a smaller community size that do not use validation resources can be converted to parathreads to free up the limited parachain slots while retaining functionality. Chains that would otherwise be unable to compete in an auction of their parachain or do not believe it is economically viable can share Polkadot security resources by paying for processing each block to the hosting parachains. Bridges. Traditional blockchain technology lacked bridges or the ability for one blockchain to communicate with and transfer value to another. Bridges remove this constraint, allowing parachains, which are essentially blockchains encased within the Polkadot ecosystem, to communicate and share data. When communicating or transacting via bridges, the economic sovereignty and diversity of the respective blockchains are unaffected. Bridges are available in both centralized and decentralized configurations, potentially leading to communication with central banks when they begin minting digital fiat currency. It is important to note that bridges are a planned feature of the Polkadot blockchain that has yet to be implemented. Polkadot says it will be updated as more information is determined and made available. Tokenomics and governance with the Polkadot token, DOT. Polkadot's native token, DOT, is used for transaction processing, payments, and governance. DOT is also used for proof-of-stake validation on the relay chain. The Polkadot network uses the DOT token to compensate validators, a governance token, and a currency. Due to a network redenomination, there are now 1 billion allocated DOT tokens, up from the initial maximum supply of 10 million DOT. It's no coincidence that some developers working on scaling Ethereum into Ethereum 2.0 are also bringing the Polkadot ecosystem to the world. Polkadot's development team focused on addressing all of the shortcomings that plagued and limited previous blockchain systems, such as Bitcoin's lack of customizability and Ethereum 1.0's lack of scalability. Will Polkadot be able to realize its vision of uniting the world's blockchains into a unified, interoperable ecosystem? It's a difficult task, but the Polkadot team appears to be uniquely qualified for it. We will teach you the fundamentals of financial terminology and how to get started. You'll also learn about cryptocurrency trading and investing, growth stocks, and how to be economically confident. So be sure to subscribe so you don't miss a single upload. For the time being, sayonara.